You're listening to the 10 Bagger Podcast, presented by the Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Royburn.
Hey everybody, welcome back to another episode of the 10 Bagger Podcast. Today is episode number 10, and I have a gentleman with me. He even has 10 in his name for episode number 10. His name is Luc Ten Have, and you can find him on Twitter and also on the CEO.ca chat forum. Luc, it's a real pleasure to have you on. How are you doing today?
Thank you, Jordan, for having me. That's a good introduction. People know me because of my weird name, especially in North America, where it's a bit uncommon. Happy to be on your show. I think this is my first show or my first interview, so I hope I can tell something useful.
Oh, well, I know you will tell us a lot of useful things. And why don't you start by telling our listeners the story that you were telling me of basically how you got started in investing and then how that led you into the junior mining world?
Yeah, sure. Basically, I have no personal friends, or I don't know anyone in my close network or my personal network who is investing for a living or even for a hobby. So it was a bit of luck that I was working at a farm when I was 14-year-old, and my boss at the time, I was just doing that in between school, of course, holidays, and he gave me a recommendation. He said, "Hey, you made a little bit of money this month, and why don't you put that into this stock called Gatronics at the time?" And he already had a 15-bagger, I think, when he gave me the advice to buy it. I didn't know, so I put some money into it, and that doubled pretty quickly. Felt very good, and he told me to sell it, but because it went up so quickly, I wanted to keep it, so I didn't sell it. And he told me that's on your own risk. So it started to go down. I ended up selling it for an 80% gain, I think. And that made me very interested, of course, because I had to work very hard for that $1,000 euro at the time, and I just doubled it in a week doing nothing. So after some time and investigation, I started buying stocks just blindly because I liked the name. And I actually put way too much money into those things. I just bought stocks for €6,000, which was a fortune for me at the time. And I doubled it, which was, I don't think it was a good thing because I did it again and again. And I was very lucky a couple of times until that point that you're not lucky anymore. And everything starts to collapse and you lose your money again, which is very stressful when you're 15-year-old and you start losing lots of money you worked for. So you have to start up again and try to understand why you lost money. And that's how I got started. But actually I went from risky to even riskier stocks and more risky stocks, ending up in the pink sheets, the American pink sheets, total gambles. Actually quite successful in the beginning again, and later on losing money again. And that took for probably 10 years until 2012 when I first started buying some mining stocks. And that's basically the start of the first 10 years of my investment career or gambling career, so to say. And to end this introduction, let's say it was Willem Middelkoop who is running this fund, the CD fund in the Netherlands, who was on television a lot talking about mining stocks and about gold and silver. And that interested me to investigate all these companies he was talking about. And that's how I got started in this business.
Okay, so I think you said 2012. So what led you to becoming such an expert on, I think, the smaller juniors? I think that's what you focus on. Maybe you can talk about, where your focus is and what led you to gaining the skills that you have now from the point where you just started dabbling in mining.
Yeah, so I will summarize a little bit more from 2012 to 2015 because that was an important time. I think I didn't really understand the business well at the time. I basically bought stocks because somebody was recommending it, or Sprott was buying it, or there were good stories somewhere. And when I look back, I actually looked back before this podcast. I see that I had $10,000 divided over 12 names. And those names were Sandstorm, Rainy River, Mag Silver, Wildcat Silver, which became the big zinc mine. So pretty good names, but very small positions, luckily, I think. Even though they were very good names, I still lost money on some of them. And spent lots of time. 2012, 13, 14 was just, I didn't really know what I was doing, I think, still. But I think in 2015, doing it for 3 years, trying to understand everything, finally I started to understand things. I had no network at the time. I was just doing everything from home. And that's when, of course, the bottom was approaching. We didn't really know, but I was suspecting it because of a couple of reasons. And my first big winner was Mariana Resources. And that's also, if you ask me, the small stocks. Yeah, Mariana Resources was a very small stock on the AIM in London. Not the best market to invest, I think. But they had a really big discovery. Mining Book Guide mentioned it already. And I bought quite a lot of shares and did well on it. And I don't think it was one of the best run companies. But with such a big discovery, a lot of things will go well. And that money, I was afraid to lose it again, so I sold it a bit too early. And that's when I really, I think, made a big change in my portfolio. I started buying quality names in hindsight, and maybe a bit lucky because I first found Orion at 3 cents. I didn't buy it yet, and some other names. And by just calling all these companies and talking to those companies, I started to understand a little bit what they were doing, and people recognized my name because I was calling all the time, maybe too many times. And slowly but surely, I started to understand why certain stocks go up and why certain stocks never go up. It's not just the price, it's the structure, it's the people, it's a lot of different things. And basically from 2016 to today is when I became quite successful and also changed my strategy in basically taking bigger positions. The positions that I take are bigger, less, probably 10 to 15 positions. In general, for me, quite large, but only when I really know the company well. I call those companies all the time, and I always want to have a certain advantage to other people. And basically, I only have an advantage when there's very little information because I'm not a geo, I'm not a mining engineer, I'm not a broker, I'm not in these circles of wealthy people. So how can I have an advantage? Well, only I think when there's very little information and when other people are not interested in a certain name. And that at the time, for example, was Orion. Nobody paid attention to Orion. I called them up and they told me they acquired lots of land in Finland. They told me they had a good supporter. They didn't want to say who it was. But I was wondering how they kept the business running because they had no money in the bank and just didn't raise any money. Instead of issuing lots of warrants, they were just using very small loans to continue their work. And they explained me that they didn't want to issue shares because that would have been too dilutive at 5 or 10 cents. And they first wanted to do some good work before they raise money. And that fascinated me. So I started buying Orion at 12, 13, 14, 15 cents and all the way up to 30 cents. When I found out about the person backing it, which was Dave Lotan at the time, he basically saved the company or at least helped them financially and with his network. And I was quite fascinated that by doing the right things early, you can really set up a company for that one moment in time when you get lucky or when you do your work and you finally have that discovery. So I think Orion is probably my first real 10-bagger and first real winner, let's say, where you really make a difference. It feels you make a difference. It makes a difference for your life, basically. So that's the story up to 2016, basically. Yeah.
So with that's so fascinating. It brings to mind a couple follow-up questions. Well, because I want to ask you a question about selling, but I want to look at criteria first. So for all the people out there that look at these stocks that are really penny stocks, let's say, 5 cents or up to 10 cents, aside from calling the company and learning about it, I know you mentioned a few of these things, but how can you tell if this is something that really has a shot to go to like $1 or $2, or if it's something that really they don't know what they're doing and it's not a real serious company?
It becomes quite easy for me to find out about it. And I think Stockwatch is a first thing that is critical, for me at least. Because on Stockwatch, you can just check the complete history and you find out within 5 minutes if the company is known for issuing shares every 3-4 months, doing these $100,000 raises, issuing full warrants. And warrants are not bad per se, but when you are a 5-cent company and you do not necessarily have the big names backing you or the right network backing you, then issuing lots of warrants at 5 cents or 10 cents is often, I think, the end of your company. Because if you have like 50 million shares out and another 40 million shares at warrants at 10 cents, you need an extremely big discovery to really push yourself through that wall of warrants. So the first thing to check is that share structure. And everybody is saying it, but it's really true. I often prefer not to get a warrant in a financing because I have many stocks with warrants and they almost never give me a good return. And the companies that are really focused on share structure, and preferably with good people, of course, they often do well. So what I also try to always find out is how many people were participating in these financings. So if I see a financing with 100 people for $1 million, for example, then I cannot imagine that all those 100 people have the same vision as the company. And when I see a financing with 10 people for $1 million, then I get the impression that it's a smaller group, maybe a network, or at least people that have a small circle around the company. They know what the company is planning to do, and they are often willing to wait a little bit longer because they, for example, each invest $100,000, which is not very easy to take out if you are a 10 cent or 15 or 20 cent stock. So I prefer to have a good share structure, but also with good people and not too many people. Because after 4 months, when you have 200 people on board or 100 people, you always get profit takers. So I like it when companies say no to me when I ask for a private placement, because I know that they are selective. Because if they don't know me, why would they even take me on board, right?
Of course. That's a great point. But I want to ask you as far as selling, because let's say you get into one of these things and it becomes a 5-bagger or a 10-bagger, but you still think there's a lot of upside. What do you? I don't want you to give away everything you do, but do you just sell a little bit of it? Do you sell half of it? What do you feel is the best plan of action there?
That's actually my weakest point, I think. I think I'm quite good at spotting cheap stories, but good stories. I'm not as good in selling and timing. It's so difficult because the more information there is, I have a disadvantage when there's more information. So when there's a discovery, there's just one hole, and I can often see myself if that's a good hole or not, if it is twinned or not, if it is a real exploration team or somebody who's just trying to make a nice story. So everybody can just look at that one hole and use that little information to make the decision. But when there's lots of information, then I'm not a geo, so I will have to talk to people to really understand the story. So when companies start spitting out news with lots of drill results, and it becomes more difficult for me to decide, is this still that obvious growing story or not? And of course, sometimes it's obvious when you have 100 meter, 10 grams per ton gold, and they continue to hit those type of holes, but that's very rare. So selling for me is difficult. A good example right now is Azimuth. I noticed their results over the past months. I know the company well, and I knew that they were onto something, but it doesn't really mean that they have a big discovery, but things were really looking good. And when they announced those 7 holes, that they all had visible gold, or at least gold grains in them, which doesn't mean necessarily that they have high-grade gold, but the theory was basically working for them. I got the impression also by the markets, stock was going up, and they did another financing. I got the impression that that something good was going to happen. So I bought a toehold position, and this week they made a big discovery, and I bought more stock in the market. And now it's quite difficult because you have one hole, pretty good hole, and I've got a 3 or 4 bagger maybe, and what to do? It's really difficult, and I cannot give you the right answer. I think the best thing to do is to sell a bit, maybe a third or a quarter of your position, and let the rest go, because many people say let your winners ride, but other people say take 50% out of the stock after a double. So if you really want to get that 10 bagger or that 100 bagger, you need to have the confidence to also keep a decent position to make it really worthwhile, right? So for me, selling is the most difficult thing, and I think that will always be like that. I think it's really difficult to time it right, because if you sell half of it, you will always have a bad feeling. If the stock goes up, you think, oh, I should have kept the stock. If it goes down, you think, oh, I should have sold everything. So it's difficult.
Yes, it is. And one more question about selling, because we just talked about selling winners, basically. We know that not every stock we pick is going to be a winner. So but I guess if you have a sizable position, then it's really hard to get out of these things. And I guess you can be very patient, for a couple of years waiting for a company to, execute its plan of action. But then in a scenario where you're unhappy and you want to sell, then how do you go about doing that? And also, when do you know when to sell these things if they're not working out?
Yeah, I have no problem with the stock going down. I'm not using stop loss or something. When I buy a company, I buy it for a reason, and if I buy it at 10 cents, I know these things can go to 6 cents, and sometimes for no reason. I don't want to sell it. If I still like it, I'm gonna buy more. So, and of course, I also sell stocks, but I only sell it when I really think they're not doing the right things, or maybe the results are just not giving me what I expected, and then you have to take your loss. But if the story didn't really change, I prefer to buy more or just wait. Again, Azimuth this week, it took a couple of years, well, many years, and there are different strategies. You can wait for the first hints to come up again, good channeling and good sampling, and then finally some drill results. But you can also just buy it in 2016 and wait and have patience. And it depends how well I know the management and how well I understand their plan. To just sit and wait also when it goes down. And Azimuth went to 40 cents, back to 20 cents, up to 40 cents. And that happened over many years. And now they finally have that big discovery, we hope. And it may go to $3. But to go back to your question, yeah, selling is difficult, but I find it more difficult when stocks are going up. I get a lot of stress when stocks go up, and I'm pretty relaxed when stocks go down.
That's the contrarian mindset. Gotta love it. So, Luc, with all that said, would you mind sharing one pick that could be a potential 10-bagger?
It's difficult because if you choose one, it's always risky, of course. I have a couple of 3-baggers, 5-baggers, 10-baggers recently, but I have nothing at the moment that I would say it's a definite buy. So let me give you a couple of examples. So in 2018, I was writing a lot about Chibugamu. Good share structure, went up 5, 6, 7 times. Last year, a young broker from Vancouver, advised me to buy some Vizsla, including the warrant. That's almost a 10-bagger. I think it can go further, but the drill will have to speak. Currently, Canex Metals, they have an interesting project in Arizona. It's already a 3-bagger for me, but it's still very cheap. So it can still be a 10-bagger from here, but the drill again needs to hit to become a 10-bagger. I also own a shell company. I prefer not to mention the name because shells are very risky. Sometimes you have to wait for 5 years and nothing happens. But it's already a 3-bagger for me, and it's I'm just waiting for them to unfold their plan. I think good people are running it, but hopefully they find a good project. So to just mention one name, Adriatic is also already up 5 times. Also something I own and I like a lot. All these things still have potential to multi-bag. But those names are already up, and people have difficulties buying stocks that are already up. So let me then say a couple of names which are not up yet. I think Harfang Exploration in Quebec, they have a really good team, are backed by Osisco. Their chairman is Andre Gaumont. He was the CEO of Virginia. Virginia is, of course, known for their Eleanor discovery in 2004. So I think Harfang is doing all the right things, but it may take a year, it may take them 3 years, it may take them 10 years. So I would not suggest to buy it because of a hype. I think you should only buy it if you're patient. And I like Cartier. They are developing a mine, or at least doing a resource, doing a lot of drilling. I mean, I don't think it's a 10-bagger, but it could be a 5-bagger as well. So I think those names, but most of the names I own, I prefer to just sit and wait. I'm not the type that's buying these hyped up stocks because I want to have an advantage to the rest. And there are lots of good names on Twitter. People talk about many companies, and I think those companies are not bad companies, but they are already quite popular. And I try to buy the ones that are hated or not in the news, and just wait for half a year or a year for them to wake up, and then see what can happen.
And so if you don't mind, could you mention the symbols on those? Like you mentioned, two or three. Yes, please.
Harfang is HAR. It's trading at 24 cents. I think it went up a little bit because of the Azimuth discovery. I don't think they're very close to Azimuth, but people want to own James Bay right now. But I really suggest don't just buy it. Call the company, talk to them, and make up your mind if it makes sense, because I don't think there is an immediate catalyst, but I prefer to just buy exploration stocks with people that are not spending the money on expensive cars, but just do proper work, and that's definitely the case here. And same for Cartier. I mean, they are doing lots of good work. They are not promoters; they are technical people. Maybe they would need a promoter to get the stock price up a little bit more, because you also need to. Doing technical work is good, but if you have no promoter who is really selling the story to the right people, you are financing at 10 cents for a very long time, and you really get diluted. So ideally, you have somebody on board who can get good people in, get the stock up, and also finance at higher multiples. And Cartier so far is in the 10 cents to 20 cents range, and I think it needs to. I think it deserves to be higher, but it's not higher yet. So people are not believing it yet. So we need patience. But that's Cartier ECR.
And I think another one you mentioned was Canex. Is that correct? CANX in Vancouver?
Correct. Yeah, I think that's the story where there are very few warrants out, and the warrants that are out are in hands of people close to the company, doing good work. It's very high exploration risk. I wouldn't advise people just to jump in right now. Just investigate these things before you start buying, because it's up already a number of times. And it's better for these things to consolidate a little bit before you jump in. So I think you always have to be very careful, not just listen to somebody's advice and jump in. You really need to do your own work on it and feel good about it and understand the story. Otherwise, you probably lose money.
Right. And to the listeners out there, you really have to take Luc's point to heart. He has a lot of patience, and he becomes an expert on these things before he invests, and then he lets it play out over a long period of time. These are not maybe if the market gets really hot, these things can go up a lot in a month or two, but that's not his style of investing. So please do your own research. And Luc, as well as several other interviewees, what have they said? Call the company. Become an expert on the company. Become an expert on what you invest in. You'll gain an advantage over everybody else. So, Luc, with that said, we have to leave it there. But if listeners want to follow you or even contact you, could you tell us how they can do so?
I think the easiest way is to go to ceo.ca. I have got a account there at Luc Ten Have, LucTenhave, or the same on Twitter. You can just send me a message or follow me, and then I can text you back. Because I have no blog, I have no website whatsoever to tell my story. So I think that are the two easiest ways to contact me.
Okay, well, Luc, thanks so much for coming on. I and my listeners really appreciate it. You bestowed upon us so much wisdom today, and I look forward to having you back in the future, and we can talk more about 10 baggers.
Thanks, Jordan. I hope I see you at the Metal Investor Forum in the weekend, because I will visit it. So anyone who's there, just say hi when you see me.
Thank you for listening to the 10 Bagger Podcast, presented by the Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.